Hello, everyone. This is Peter Grandich. I always remind you this is not to be considered investment advice. Always speak to a licensed financial advisor before making any investment decision and to read all the disclosures. Well, I'm sure he's been quite busy all day telling what was really a great story. I honestly said it was one of the best presentations I ever seen a company make to explain the PEA. And I got him at the end of the day, so we're going to have more of a talk, but I'm going to put the links into where you can see the presentation and all the information. But I'm glad I was able to grab him at the end of the day to just get a little chat and to say, as a shareholder, how impressed I was with the PEA and how much I look forward to the future. And of course, I'm speaking to Matt Manson, the CEO of Radisson Mining. Matt, great job. I'm sure you heard that more than once today.
We're really happy with the response. I mean, we got lots of positive feedback. Stock's done well today, so couldn't be happier. And thanks for having me on this afternoon.
All the time, Matt. You know, you're on your 1 year anniversary. The only problem you got, my friend, is you have a very tough year to top. If you're going to make the next 12 months better than the last 12 months of you arriving, I can't wait to see what you do. But let's just kind of run through what today was all about, what you brought out to the public, and what maybe we can look forward to in the future.
Right. So we've had a sequence of events here over the last 12 months. So, as I've been saying in some of the communications, the day job is the drilling, right? That's been going on all year. We're well funded, big drill program ahead of us. That's going to go well into next year. And that's having success. But uh, back in September, you remember we entered into an MOU with IM Gold to look at the viability of using their Doyen mill, part of their Westwood mine, just down the road from us here, for processing O'Brien material, sending our material to that mill rather than building our own. That work was done in the fall, early part of this year, was successful, published it in February. So that kind of begat the PEA because now we've got the mill kind of, directionally kind of identified. So we then, okay, well, let's actually put a pin in the wall. Let's actually figure out what this project's worth right now on the existing mineral resource. We're not going to try and drop our tools on the drilling and update it. Let that continue on, take the existing block model, and what do we have right now? So based upon, a mill down the road. So what we have right now is what we put out this morning, and it's good. I mean, it's 11 years of mining, 70 to 80,000 ounces a year during the steady state period in the middle of the mine life. But because we're not building a mill and because we're not building a tailings facility, you get a lot of value for relatively low capital costs. So $500 million Canadian of value using long-term consensus gold pricing, um, um, and an exchange rate, uh, really good margins. And then that low initial capital was 175 Canadian. So in the mining business, a really important metric is the ratio of those two numbers, right? The capital intensity. How much value are you getting for the money being invested? A 1-to-1 ratio is really common in the mining business. This is 3-to-1, right? And it's a snapshot study because we know the project's still growing. The drilling is going well. So that snapshot, what do we have right now, study was what we published this morning. And I think it now raises our game because, I think people have responded well to the drilling and to the exploration, to the growth story, but we're still kind of an exploration project. Is there a mine here? How does it work? Well, that's what we've communicated today, and a substantial fundamental value here. And I think we're really just getting started, right? We've demonstrated that what we have right now on that development strategy, in this current world of costing what it is and gold price what it is, what do we have? Well, that's what we have, and it's really good. So I think that's been the basis of the good response today. People are waking up a little bit and taking notice, I hope.
So, Mike, Matt, one of the confidence that I've had, both as a shareholder and obviously grateful that you guys are blog sponsors, but as each month has passed, both you and Michael Gentili, one of your board members and largest shareholders, have seemingly, and correct me if I'm wrong, become more confident about the potential down the road. You know, a year or so ago, we talked about 1 million. We didn't really start throwing out any numbers. But even today, I believe, correct me if I'm wrong, your head of exploration talked about the potential for several more million ounces of gold. And it's not pie in the sky. In fact, if this was a different group, I'd be concerned from what I used to remember from 20 or 30 years ago. But given who you guys are and your track record, That's a lot to start talking about that in some serious manner in terms of the potential, how much bigger this could become.
Yeah, so that webinar today, we put those numbers out. We've mentioned that before, but we put all the correct disclosure around that. It's an exploration target. It's still got to be proven up, but it's our numbers are 3 to 4 million ounces in 15 to 20 million tons. And we're just using the grades that we have in the existing mineral resource to arrive at those targets. And that's what you get. 3 to 4 million ounces is what you get if you take what we have right now and what the old mine was, and you just drop that down to 2 kilometers depth, which is our reasonable exploration horizon, and what our neighbors left and right of us are mining down to, right in this area. So that's what you get. You get 3 to 4 million ounces. So the drilling is proof of concept. We're doing these big step outs. We're not nibbling around the edges of the resource and moving things forward slowly. We're having the courage, I hope, to take these big step outs and test whether or not that thesis is correct. And we've been hitting, right? The drill hole I like to talk about the most was this drill hole that went below the old mine, 1,500 meters, drilled it, towards the end of last year, published it just at the end of last year. It was 500 meters below the base of the old mine. And in 70 years, Peter, since this mine closed in the late 50s, closed when gold was at 35 bucks an ounce, and they weren't ever going to go below 1,000 meters of depth. We drilled at 1,500 meters and we hit an ounce over 8 meters. And now we've been doing wedges and directional drilling around that, a cluster of holes around that, and they're all hitting mineralization, they're all hitting visible gold. So that's proof of concept that this target, which is based upon the geological supposition that this deposit keeps on going down, and it's mesothermal gold in the Abitibi, so that's what they do. It's not rocket science. It's working, right? And so that is I call that the day job, right? I mean, that's the core number one priority of the company. That's where the fundamental value of any mining business is. Do you have the ounces in the ground, right? So that's where that's going. And wrapping a mine plan around just what we have right now is $500 million Canadian, right? So and we have a market cap this morning of about 140 Canadian. So the stock has responded well the last 12 months. You're right. It's got more to go. Forward-looking statements applying here, of course, but we're optimistic, Peter. This is a great project. It's in the best location you can possibly imagine. Team is doing a great job here, and I think we're delivering on the promise of this project.
Well, one of your skills, because you just said it now and I need to say it publicly, is you've proven there is no I in team as the leader of that company. And I commend you for that. And I think it's one of the many reasons on it. Let me ask you a get out question. Uh, Not so much about the company. 12 months ago when you got there, the market wasn't exactly overheated or many people talking about mining. But since you've gotten there, we've seen a marked increase in the interest in mining, particularly in the last few months. How have you seen that in terms of what I'll call investor interest, but not necessarily retail, institutional, corporate, and also I think a new topic has to be added when you talk about potential investors, and that's generalists. People who don't just look at gold, but look at other things are now also looking at gold. What's the difference in the last 12 months?
That's a really good question. And when we are, I would say what hasn't changed is the institutional investor market. You've still got the same types of people out there, the Van Eycks and the Franklins and the Fidelities, and they're managing similar sizes of funds in a similar way they have in the past. That market, I wish that market would have grown more. I wish those guys would have had more money inflowing, but they probably haven't so much. What's really important for us is the number of high net worth individuals, discerning investors, people with substantial funds behind them who are making discerning investment decisions based on gold. That's changed. That market is growing and growing and growing, right? And so when we are doing communications and marketing and talking to investors, I'm talking to more of that type of investor than I've ever talked to before. Uh, on the corporate level, our audience, given where we are, what we have, what the strategy is, our audience when we're doing our communications like webinars is as much to that corporate audience that I know is out there as it is to investors. and I have that in mind. And that's because the corporate gold producer is making more money than ever before, right?
Absolutely.
And assets are not easy to find. And there is a lot of money in this business right now. And there is a disconnect between the amount of money these guys are making and the valuations of companies like Radisson who have something valuable in the ground. So there's a lot of traffic in that world right now, and we're cognizant of that all the time.
All right, Matt. Great job so far, but in an industry, at least in the financial service, where it said, "What have you done for me lately?" Uh, keep up the good work, and hopefully, as more drill results come in, we'll be speaking again.
Yeah, thanks, Peter.